Will Nifty hit an all-time high? Now, I don't claim to know whether that's going to happen or not, but Nifty has gone up 7.5% in just 1.5 months. But what we can do today is we can analyze Nifty technically, look at earning reports, see what the trend is, and after all of that, we'll also see two companies which have made shockwaves through the internet after what they released in their Q4 earnings. I promise you, these two companies are super interesting. But before doing that analysis, hit that like and hit that subscribe. So let's start by opening Nifty's chart. You won't believe what I see here. Notice two things over here. First, we know that Nifty is an uptrend. I mean, you don't need a chart to tell you that. You know the markets are going up. But notice that we're above that blue line. That blue line is nothing but a yearly average. We're looking at a weekly chart over here of Nifty. And each bar represents 1 week. So a 50-day moving average is roughly about a year's average. So we can see we're above the average slightly. Another thing you'll notice, since September 2021 actually, the market has been in a complete sideways. So let's just quickly see what we have here. Keep it simple. The highest point over here is this point. That's what? 18,887. And the lowest point in this range is simply 15,183. Now, don't do too much of analysis. All you need to know is, one, are we above the moving average? So the power is towards the bulls. Second, have we broken any swing high? So the chances of a new high are slightly larger. So we can see over here that we've broken this swing high over here. I'll just zoom in. We can see that this is a swing high. This is a swing high. This was broken here. This basically means the bulls are in control. Does it mean that we'll hit an all-time high? No, but it does mean that there is more buying power. And surprisingly, you'll also see that in FII inflows. So the smartest money on the block is not you, is not me, is not those guys on Twitter. It's actually the FIIs. These are professional money managers who are trying to figure out where the market's going. And analyzing that data is a good thing. So we can see here that in March and April, they were net purchasers of stock. This was 2,000 crores roughly in March and 5,700 in April. In May, they're doing about 1,000 crores daily. It's about 17th, 18th May right now, and we can see that the net inflow has crossed 17,000 crores. This means that the market has FIIs thinking that they should be purchasing at this time. This is usually a good thing. So now the question is, why are FIIs pumping in so much money? So I have a page here. It's the Q4 results. Here we get news on all the companies posting their results. So we can see SBI Q4 PAT is going up, Bank of Baroda profit is zooming. I love it when media companies say the word zooming. Why would you say zooming? Net interest income is up 34%. We can see Indigo. We can see again JK Tyre profit jumps. Now this is kind of tiring. Imagine going through all of these pages to figure out whether India Inc. is making money or not. Obviously doesn't make sense. Is there a simpler way to do it? I have another page over here which covers India in total. So this is basically the earnings analysis quarter on quarter and year on year for Nifty companies. So isn't that useful? Instead of going through each company, we can see an aggregate of all the companies' unka earnings and we can compare it to the rest. So we can simply see that the sales has gone up 15% year on year. PAT is up 13.5%. Interest doesn't matter, but you can see that the tax number has also gone 6.91%. Now, simply put, there is growth happening. And when growth happens, money also follows. From this, all we can tell is that growth has happened. The market or the earnings of these companies is not falling so far. But let's go a little deeper. Let's look at the individual sector performance. Now, this video is not going to go in super depth. It's supposed to give you an idea of what the story narration is, right? We started with FIIs. We looked at price. We moved to FIIs. Now we're looking at Nifty. Now we're going to look at sectors. So here we can see bank, IT, FMCG, etc., etc. All you need to do is look at these two columns. This is percentage change here and this is percentage change. This is telling you whether sales and PAT went up or down. And very simply, you have up arrows and down arrows to indicate that. So we can see that the banks up arrow, but yearly the PAT is slightly down. We can see IT is slightly up, FMCG slightly down, NBFC is up. Very simply put, since we just want to get an overview, are you seeing more up arrows than down arrows? And do these sales charts over here, the trend chart on the right, is it generally moving up? So we can see banks is generally moving up, IT software is moving up, FMCG is moving up. Remember, a single quarter going down doesn't mean anything. FIIs, when they invest for the next 5 years, 10 years. They are making a macro bet. So generally, the earnings must be going up, and we can see that it is. I don't see any sector which seems to be flattish. Maybe FMCG, it looks a little flat. Financial services look sort of flat, but the rest look like they're sort of going up a little bit. Pharma, in fact, I'll say also looks flat. But generally, you'll see most of our sectors are going up, which is why we have that FII story. In fact, what's interesting is that all these large companies were very small companies at some time, and people would have invested it. I'm sure you know a Chacha or a Tao who invested in, or a Chachi who invested in an Infosys and made a lot of money, maybe a friend of a friend. Why isn't that person you? Think about it, less than 3% of India invests, unlike the West where maybe more than 50% of people invest. The only difference between you owning that stock and anything else is that you don't have the skill to learn how to build a portfolio. So we think learning to create wealth by investing is a basic right everyone should know. So we conduct Prime classes every weekend. We have Trading Prime, which teaches you 0 to intermediate for free. And we have Investing Prime, 0 to intermediate for free. But there's a problem. Not everyone gets in. Only the gritty and the smart get in. So there's an application form. Fill it up. If you get in, you will learn by creating proof of work in a community live over the weekend. I'm sure you love it. Do apply. If you want to change your future and learn about trading and investing, check out the weekend for Prime. Next, I wanted to talk about the macro side of all of this. Now, all of this analysis will lead to two interesting stocks, which I'll tell you right at the end. Of course, they're not recommendations, but when you look at what happened to their business, what happened to their sales, their PAT, I'm sure you'll find it interesting. So please stay till the end and also comment on what you think about those two companies, whether they're shit or whether they are nice. So now let's talk about inflation. Now, I'm not going to bore you with inflation numbers, but it's important to understand this because it's directly connected to bonds. And there is a strategy you can use on bonds at this time, and that opportunity is immense. So there are two types of inflation that we generally measure. The first kind is called CPI, which is the Consumer Price Index. Inflation is nothing but महंगाई. Parle G's prices may not have changed, but everything else, their prices have changed. So that's what CPI tracks. This is the food we eat, electricity, etc., etc. So this is from a consumer's perspective. And the other is WPI. WPI is wholesale perspective. So imagine there is a biscuit factory. It is buying lots of wheat. It is buying lots of other ingredients. They are paying wholesale for it. And therefore, that inflation is tracked separately. So basically, the RBI, as you all know, has to bring and rein in inflation between 2% and 6%. And there's an entire act around this. We won't get into that, but it has to stay within this range is what the RBI has to do. Now, if you look at 2023, and I have the data here, so CPI has gone from 6.52% in Jan, then to 6.44%, 5.66%, and 4.709%. What trend is this right now? This is Jan, Feb, March, April. Write in the comments, is this a downtrend? It is. It's a downtrend. Put in the comments if you think it's a downtrend. Inflation is going down. It's the same thing with WPI. Editor G, can you please add animation over here because I don't want to write it right now. Very nice. So you'll see over here, we've gone from 4 to 3 to 1.3. That is also going down. Okay. I will make arrow for editor, sir. But basically, you can see that all of the trend towards inflation is going down. Now, why is this interesting? So basically, when inflation goes down, bond prices go up. Now, when inflation is going down, generally what happens is that rate cuts start happening, right? Rate cuts also go down. When rate cuts go down, which means आपने सुना होगा repo rate cut हो गया by RBI, bond prices go up. So basically, if inflation is low, rate cuts are likely to happen because the trend is down. This is a great time to enter short and medium term bond prices because some money can be made over here. If you have any confusion with this, put it in the comments, we'll help you out. But basically, good time to consider some medium-term bond mutual funds. So देखो bond बहुत हो गया. Let's talk about stocks. I think that's what you really want to do. So the first thing I'll do, I'll open Tata Motors. And dude, I think price matters a lot. So what I'll do is I'll open the stock chart first. And then I'll tell you why this stock is special from a fundamental perspective. So we can see Tata Motors over here has been doing nothing since September 2021. It's been sideways, but recently price has moved up. So you can draw a bunch of lines here and say breakout ho gaya. But let's understand it from a fundamental perspective. The first thing I want you to notice is quarterly. So generally when you look at profit and loss, you want to make sure you're looking at quarterly to see momentum and you're looking at yearly to see trend. So first, let's see the shorter time frame in fundamental analysis, which is quarterly. And we'll just look at one simple metric, which is net profit. Let's keep it very simple, right? Over here, we can see every single quarter, it's a minus. Minus 4,000, minus 1,400, minus 900, minus 4,000. Looks like a startup, but it's not. It's Tata Motors. And we can see in the last 2 quarters, it's actually turned a profit. That's become 3,000 and 5,500, which means the trend right now, the momentum is on the higher side. This is a very good thing. If you look at the P&L side, you'll see that it's actually made its first profit in the closing of March 2023 after many, many years of pain. So this is one simple reason why this is happening. This is called a turnaround story, basically a loss company making a profit. Now, why this is happening is beyond the scope of this video, so put it in the comments. We can maybe have a dedicated video around Tata Motors, but pretty interesting. What do you think? Also, do you see any red flags in Tata Motors and the auto industry in general? Put it in the comments. I'd love to know what you think. The second company is even more interesting and is in the specialty chemicals sector. Now, we know there's a lot of money in specialty chemicals. Have you seen those charts? Let me open one of them that we're going to talk about today, and that's SRF. So if I open SRF, look at that, right? Just look at that chart for a moment. It's gone from this 300 to this massive highest point being 2,800, but it's been in sideways for some time now. Why is that? And why are we talking about it in this video? SRF is investing in something called brownfield capex. Let me explain. There are 2 types of capital expenditure a company can do. One is greenfield and one is brownfield. It's a fancy name. Greenfield basically means खाली जमीन है, इसके ऊपर investment करना है. You have to build something. After all of that expenditure, after many years, some money will come out and you'll hopefully make a profit from it. It's called greenfield. Basically means khali zameen hai, you have to start from scratch. The other kind is brownfield. It means wahan pe already equipment hai, there is already factory, there's already equipment and some spending has been done and it's already giving some output. And the company decides to expand that existing place. So here the returns come a little faster because, well, the factory is already in place. Now SRF, interestingly, bought 293-acre land in a place called Dahej. Dahej? Is a place called Dahej? Okay. In 2010, it started with a greenfield capex. So they started from scratch. It wasn't making money for them, obviously, right? Because greenfield costs a lot and doesn't give a return. That used to give a capital turnover of 0.7x. But now, since a lot of time has gone by, it is now giving a 1.1x, therefore improving the overall profitability. Basically, they had invested in 2010, uska phal abhi mil raha hai. Over here on the balance sheet, you'll see something called CWIP, which basically means capital work in progress. So if you put capital on, say, a greenfield and money comes after 5 years, the number over here will be lower. So returns come slowly. But if you do it on a brownfield, existing piece of land which is already useful, then the returns are faster. So basically, the higher the number, that means the more efficient the system is. You can see that in 2023, the CWIP number is the highest. This means the brownfield investment they're doing is actually working. But ये सब तो ठीक है. Let's go back to Nifty. तो यार Nifty का price expensive है कि सस्ता है? Let's see. And I love looking at price to earnings ratio. It basically gives you an idea how much money you're paying per earnings that the company is doing. And over here we can see that Nifty is right now fairly priced based on historical P. And you can see it's around 21.39. Median is what? It's around the same, right? Median is around 20.57. So it's fairly priced. Now let's try to guesstimate what can happen. So over here, we can see Nifty is at 18,400 something. The EPS is roughly 839. Now let's suppose there is 20% growth by the end of the year. No, wait, let's make it more conservative. There is 10% growth in the earnings of Nifty over the rest of the year. That will basically bring us, and let's assume a PE of 22, then that will bring Nifty at the end of the year to 20,300. Now this has two assumptions. One, I've assumed 10% growth hoga by the end of the year. Second, I've assumed PE is 22. If that PE becomes like 25 or 26 for whatever reason, this number could be much, much higher. Either way, 20,300 is still sort of a new high actually. And the highest we've ever gone is 18,887. So the conclusion is this. Thanks for watching the video, but no one really knows what will happen to Nifty. But now we have a lot of other things to maybe go by. I'd love to know what you think. Also, if you think this was good, we do a bunch of videos every week. Hit that subscribe button. We also have this really nice podcast called Money and Me. Check that out. It's stories with some amazing people, and you'll love to see how they view money when they were kids, when they were older, and now most of them are pretty rich. So if you're interested in that, check that playlist out and check out everything else we do on the channel. See you in the next video.